When investing, most investors would probably prefer having passively managed funds rather than having to pick individual stocks themselves. If that's true for you too, then you're likely looking to invest in index funds right now. If that's the case, then you're probably looking for index funds to buy this year. Lucky for you, we've compiled a list of Fidelity index funds for investors to consider buying this 2022. These funds are also guaranteed to have high growth potential, so make sure to stick till the end of the video to find out all about them. Hey, welcome to Stock Market Mate. Today we'll talk about the Fidelity index funds to invest in this 2022. Before we get into it, subscribe to the channel and hit the notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. What are index funds? Before we introduce the Fidelity index funds in our list, let's briefly discuss what index funds are as well as Fidelity Index Fund. For those of you who haven't heard of them, firstly, an index fund is an investment of securities which closely mirrors the characteristics of a market index as well as its performance, such as the S&P 500, which consists of about 500 large US companies. Another example of an index fund is the Dow Jones Index, a stock market index of 30 US stocks that are eminent. So basically, the Fidelity Index Fund is a diversified US large-cap equity fund that aims to closely track the performance of the S&P 500 index. The reason why investors most likely prefer index funds is because it's passively managed rather than mutual funds, which are actively managed, meaning there's less hassle. So say for example, if I'm the fund manager of the Fidelity 500 Index Fund, which mirrors the S&P 500, instead of analyzing stocks myself and selecting which stocks will perform best in the market, I'll buy the 500 stocks that are in the S&P 500. Another reason why investors might prefer index funds is because it has a higher chance of providing better returns, unlike when you're just trying to select winning stocks. As a matter of fact, a third of mutual funds have become large enough to imitate an index fund, all while demanding 1% fees. This is probably why an index fund will outperform mutual funds, as their fees are less than that of mutual funds. In fact, index funds have very low fees. In 2020, the average expense ratio was 0.06%, compared to actively managed stock mutual funds, which was 0.71%. Additionally, the Fidelity Index Fund has the lowest expense ratios out there, even compared to Vanguard index funds, which in 1976 initially led the idea of index investing. List of Fidelity index funds to buy this year. Number 6. Fidelity Total International Index Fund, or FTIFX. They look to provide investment results which are in tune with the total return of developed as well as emerging foreign markets. FTIFX invests in stocks that are in the MSCI All Country World Index, meaning this fund invests in only stocks that are outside of the United States, which can be beneficial to investors who want to add more international exposure to their portfolio. Moreover, this fund has a total of 4,825 holdings, which includes Nestlé, Samsung, and others. Its average return since inception is about 8.89%, meaning if you invested $10,000 back in 2016, today it would be worth a bit over $16,000. Furthermore, FTIFX has an expense ratio of 0.06%. Now the downside to this is that foreign stock markets are usually volatile, which means it can notably decline due to factors such as political, regulatory, or economic developments. Number 5. Fidelity Zero Total Market Index Fund, or FZROX. FZROX seeks to provide investment results which match the total return of a wide range of US stocks. It usually invests 80% of its assets in common stocks that are included in the Fidelity US Total Investable Market Index. This was designed to reflect the performance of the US equity market as well as the large, mid, and small capitalization stocks. FZROX is actually the first index fund with absolutely no expense ratio. This could be a strategy that Fidelity is doing to attract investors to open up accounts with them. Its return since inception is an average of 18.01%. This fund currently has 2,662 holdings, which include famous industries such as Apple, Microsoft, Facebook, or now known as Meta, Google, and many more. This fund is not only free but also well diversified. However, it does have its own downside, and that is that they are not transferable to other brokers. This can trigger tax events such as a capital gain. A capital gain is the tax imposed on gains attributable to the sale, exchange, or the other disposition of capital assets by the seller. Having this would reduce profits and add double taxation, which we're definitely better off without. Number 4. Fidelity Zero Large Cap Index Fund, or FNILX. The fund seeks to achieve investment results that correspond to the total return of US stocks with large capitalizations. Basically, it invests in companies which are included in Fidelity US Large Cap Index. The term large cap stocks refers to stocks that trade for companies with a market capitalization of over $10 billion. Usually, these companies are well established, with a history of having quality goods and services. This fund currently has 516 holdings, which include Tesla, Google, etc. Its return since inception is 18.56%. Its expense ratio is also 0.00%, which means it's also free. One thing to note is that the fund is still new, which means it's a bit more difficult to predict how well it's going to perform in the future or if it will continue at all. This fund isn't that well diversified also, so that's definitely a slight drawback. Number 3. Fidelity NASDAQ Composite Index Fund, or FNCMX. FNCMX attempts to achieve investment results that are compatible to the price and yield of the NASDAQ Composite Index. Over 80% of the fund's assets are typically invested in common stocks included in the index. The S&P 500 has actually been outperformed by NASDAQ in the past 15 years. This is due to the fact that out of 3,264 holdings in this fund, it has top stocks including Apple, Microsoft, etc. that make up almost half of the index. And unfortunately, it's also due to the reason that it lacks the diversification that would have been beneficial to investors. The average 10-year return of FNCMX is 20.76%. Meanwhile, its expense ratio is even higher, coming in at 0.29%. Number 2. Fidelity Total Market Index Fund, or FSKX. The fund tracks the Dow Jones U.S. Total Stock Market Index, which covers all U.S. equity investments. All U.S. stocks meeting the minimum free float and liquidity criteria are included in the index. Though not substantial, its small and microcap exposures can give it a performance advantage over its large brand Morningstar category peers when smaller stocks rise. This fund is actually a bit similar to FZROX, except that it's transferable to other brokers unlike FZROX. Furthermore, FSKX currently has 3,875 holdings, which include companies such as JP Morgan Chase, Berkshire Hathaway, etc. Moreover, its average 10-year return is 16.25%, with an expense ratio of 0.015%. Number 1. Fidelity 500 Index Fund, or FXAIX. Composed of 500 large-cap stocks, the Fidelity 500 Index provides investors access to well-diversified, low-turnover, low-cost exposure to large-cap stocks in the US. It is rated gold by Morningstar analysts as a result of these qualities. It is a cost-efficient way to track the S&P 500, which represents US large-cap opportunities. Index constituents must be profitable and highly liquid in order to qualify for the S&P inclusion. The requirement ensures that occasionally exceptions are kept out of the index, enhancing the portfolio's risk profile, regardless of the financial viability of most large-cap names. FXAIX currently has 508 holdings, which include Nvidia, Apple, Microsoft, Facebook or Meta, Google, Class A, etc. Its average return for the past 10 years is 16.54% with an expense ratio of 0.015%. There is no doubt that this index fund is the best Fidelity index fund in the market. However, like every fund in this list, it also has its own risk to consider, and that is that you won't get exposure to small-cap stocks as they only invest in the S&P 500 index. Typically, a small-cap stock has a market capitalization below $2 billion, although small-cap companies provide huge growth opportunities which are not really found in large-cap companies. And that concludes our list of high-growth Fidelity index funds to purchase if you're thinking of investing in index funds this year. Don't forget to carefully consider the risks that each of these funds come with so that you know exactly what you're putting your money on. Depending on your investment goals, it's great to mix one of these funds with the other, especially those that are not well diversified, so that you will achieve more diversification as well as your desired income. Well, that's about it for today. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!